Good afternoon. Actually, it's morning. I'm taping this in the morning. I'm actually on my game today. Hey, welcome everyone. This is Craig Modelmog for this week's episode of Wall Street X's and O's for the week ending July 1st. It's hard to believe we're at the 4th of July already. I say this every time I know, but I'm always amazed at how fast time goes, which puts a greater emphasis on making the most of every day. Which is legit. So anyway, but before I kick things off here, I would like to welcome everybody. For those of you that have joined me before, you know that this is kind of a John Daly version of grip it and rip it. I take this in one shot. It's unedited, which you will see very quickly most of the time. But I just have a goal of really trying to educate people on really what's happening, helping people make sense of the narratives that are being distributed out there, and more importantly, really focusing on the things that aren't being discussed, because usually those little finite points matter. They really do matter. So without further ado, I'm going to forward here in the presentation my disclosure, which I know you all are going to speed read because there will be a test at the end. I'm not kidding you on that. And again, Cornerstone Wealth Management is an investor advisory firm in the state of Colorado. The content that is presented on this is for informational purposes only. The information contained is not an offer to sell, a solicitation, or an offer to buy. It is not securities or investment advice. It is not legal advice. It's not accounting advice. Basically, I'm just speaking into the wind from a disclosure standpoint, which it is what it is. But anyway, I am not going to bore you anymore. I've got a great show today. I'm very excited about it. I say that every week, but I mean that. I sincerely mean that. We've just got some good stuff to discuss today. We're going to talk about Jay Powell and his comments this past week. I was going to do some really obnoxious thing where I cough and talk into my fist and say something not very nice, but I'm a little more polished today. So I will abstain from any profanities, at least from on this slide. We're going to talk about the truth about the economy. The data never lies. And I'm going to close it out on the third top three things on what happens when you raise rates into an economic slowdown. And then the thing I do every time, much like Johnny Carson's, that he used to do when he would flip the cards. Jimmy Fallon does thank you notes on Friday nights. I do things that make you go, And no, I'm not going to sing for you. I'm not going to further embarrass myself for my wife and kids. So anyway, moving on here. Jay Powell, you know what? I love the guy. He seems like a nice man. He's an attorney. His background is in investment banking world, but he has done some things here that I question, and I question sincerely to a great rate. And I'm going to go through a couple quotes here. Back on June 15th, as you can see here on this one, overall, and I quote, overall economic activity appears to have picked up after edging down in the first quarter. My comment, my response, we must be watching a different game. Moving on, this week he spoke over in Europe, and he had three things that really shocked me in his commentaries. The first one was, we're not worried about the shape of the yield curve. The second one, we hope growth stays positive. And the third thing he said was, we think that the biggest risk is failing to restore price stability. My response is, first, are you serious? Seriously. You're not worried about the shape of the yield curve. Seriously, Jay, come on now, buddy. Work with me here. The second one, we hope growth stays positive. Craig's response, hope is not a risk management process. Hope is not a strategy. For those of you that are in situations where you hope something happens, change. Stop now. Don't do that. Hope is not a plan, okay? And then lastly, he talks about we think the biggest risk is failing to restore price stability. Craig's commentaries, the biggest risk is price instability of both the equity and credit markets. Jay Powell, all I'm going to do is this. I'm not even going to say it. Shame on you, dude. That's pathetic. It's absolutely pathetic. That is not being truthful to the American public. It's not being truthful to the world. So anyway, moving on. The truth about the economy. This is a big one. I have some fantastic slides here and some graphs that are going to really kind of clue you in to various parts of the economy and what's really happening. Because we starting to hear things that, concerns about recession and are we going to head into a recession? And I'm going to tell we may already be in recession, and if we are not by the end of the year, I will be shocked. Okay. First slide here. Retail sales, are they picking up? The answer to that is no. This goes back to January of this year. You can see where we're at in May. This is not a positive line. This is a bad line. Okay, our retail sales are dropping, and they just went negative for the month of May, which is reporting on April. Next slide. Service activity. This is the Fed service sector survey that they do. This too went negative for the month of May after starting out very positive in February. Okay. Again, service activity. These are activities, services, service providers. This is also very bad. Next slide. New orders. This really relates to manufacturing. Okay. You can see here how since June of 2008, okay, this is 08, you can kind of see how the economy ebbs and flows, which is normal, okay? Bottoms out, up. Really, this is pandemic, P for pandemic. The big rebound, now look what we're doing, okay? This is manufacturing, new orders. That is not good. People are starting to not buy stuff. This is only going to continue to go down. This probably breaks this here, is my prediction here in the next quarter or two. We shall see. I'm going to come back to this slide here in the future, so stick with me. Next slide. Housing. Housing has been incredible. It's good to be an owner of your home in pretty much across the whole United States, particularly in some parts, Colorado being one of them. I look at what they say I could sell my house for. I would not pay for my home what they say it is worth, but that's the world we live in. What is starting to housing? Again, housing is trending downward. Why? Interest rates have risen significantly. They have more than doubled in less than 12 months. That is mortgage rates. They went up almost 1% here in a week. This was a couple weeks ago. 30-year fixed mortgages right now are north of 6.25. This is probably not going to get better anytime soon, and we're starting to see that there's less homes being purchased, there are less homes for sale, or there are more homes for sale in inventory, less being purchased. We haven't seen that in quite some time. Housing is a big part of inflation. Remember that. Key areas of inflation, CPI, oil, housing. What's happening to oil? Well, let's look at oil right now. Let me get my right mouse here, and I will tell you a specific price of oil. And I'm filming this at 10:55 a.m. Mountain Time. Oil right now today is up $2. It's $108 a barrel. That is light sweet Brent, which is the international type of oil, is up $2 also at 111. Oil has dropped significantly along with a lot of commodities. Commodities are rolling over in a big time fashion. So we're going to see that impact inflation. It's going to take time. You got to be patient for commodities, oil specifically, and housing. Next slide. Consumer confidence. Look at this number down here. This is pathetic. People are not confident. People are concerned. What we're going to start seeing, and we are just on the front end of, is layoffs. We're going to see this begin to increase, is my prediction. Okay, and that so plays into consumer confidence, which this is the University of Michigan study or survey that they do on a monthly basis. This is not good. Okay, people are not very confident. I don't see this changing anytime soon. Next slide. CEO confidence. These are CEOs of corporations. What do we see again? No confidence. There's no confidence out there, people. I'm telling you. And when CEOs are not confident, what do they start doing? They start pulling back on the reins. What do they start pulling back on the reins in? Investment back into their company, and also they start cutting labor force. All right, this is coming. It's coming. It's not spelling out a very good picture either. Next slide. Forward expectations. These are small businesses of less than 50 people. This down here is terrible. Okay, that's a very terrible. These other gray sections here, I'm gonna scribble on my little thing here. These are past recessions going back to 1990. Look at where small business sentiment is compared to these other time periods. Is this good? This is terrible. Okay, this is also terrible. Small businesses are scared right now. They're very scared. They're having to raise prices because a lot of their costs of goods of doing business is rising. This is very challenging, and it's not going to improve again anytime soon. Next slide. Labor. Is labor picking up? The big answer to this, no. In fact, heck no. It is not picking up. Labor is starting to lag once again. You're going to see you're going to see unemployment begin to rise. Just watch it. It's coming. Next slide. Margin pressure actually is picking up. What does that mean? This is not a good thing. Okay. This means that you've got retail sales inventory is what this is here. Retail sales inventories are rising. Okay, people say, oh, we've got a problem with getting products and services out. There's a backlog, and actually there's not. Okay, this is a narrative that is false. All right, I had a client tell me that here just recently. Well, you know what? Supply chains are just still broken. Actually, supply chain has improved. You're seeing companies with big imploding or very bloated is a better word, inventories. What happens when inventories get bloated? Prices go down. Prices, okay? What does that mean? Don't be buying stuff now. Don't be buying big ticket items. Don't be buying houses. Don't be buying cars. Don't be buying expensive things. Why? These prices are going to plummet. And watch that. Again, this one here, small business prices are going up. Why have they gone up right now? Because the inflation has really taken a bite out of their profitability, and they've had to raise rates because their costs for doing business are rising. What happens in all of these situations when we are heading into recessions? Prices drop. Again, don't buy anything expensive right now. If you have bought something recently, thank you for contributing to high prices. You're a fool for buying it. For those of you thinking about it, patience, patience, capital P. Next slide. This is top 3 things. Number 3, question. What happens when you raise rates into an economic slowdown? Answer, markets crash and things break. That is exactly what is starting to happen. We've seen a crash in equities. We've seen a crash in crypto. If you're a crypto person, God bless you. I'm going to do the cross on you because you're going to need a lot more help than what I can provide you. And this is going to continue on because is the Fed done raising rates? No. Is the economy going to continue to slow? Yes. I've been talking about this for months, months and months and months. Thus, our defensive position is going to be continued. Here's the nice silver lining. Here's the blessing in the midst of all this. When I look at interest rates now, we've got interest rates right now that are pretty healthy. Rates have been falling here. I actually think they may be in the process of peaking. I'm anxious to see what the middle to the end of the yield curve does as Powell raises rates here coming up in the next couple of weeks. It's going to be interesting to watch for sure. But stay tuned. Stay tuned. Next slide. Things that make you go, I've got some good ones today, people. These are so good. First one, smartphone owners or smartphone users. And this goes from change from 2015 to 2022. You can see adults. These are young adults, 18 to 20. You can see the changes from, I can't see because it's so stinking small. I think that's 58% back in 15, so they used it too much, up to 81. The baseline average was 39% in 2015. Now it's at 58. Here's what's the biggest group. People 65 years and older were at 9%. Now look at this, they're at 30. That's more than tripled. Tripled. Older people are really getting into technology. I'm proud of them, but it's also not a good thing. Put your phones down, live life, don't watch it. Next slide. U.S. workers burnout rates. This is really good. Number one, 44% K through 12 educators. My parents were were educators. Lots of my family are educators. If you know an educator, give them a hug. Okay. If you have kids that are in school right now, write your teachers nice notes. They're having to put up with lots of garbage from kids these days. I'd be slapping the tar out of them, and I would get fired and probably thrown in jail because I wouldn't deal with a mouthy, lippy kid. I remember back in my day, teachers would throw you against lockers. I had a teacher in first or second grade, Tad Barrett, and I got in trouble, and our teacher opened up a file cabinet drawer, and it had a big ass paddle in there. He was going to beat the tar out of us if we kept up this stuff. Mom, you probably don't know that story. So if you're watching this, I didn't get in trouble. I made the right decision, and I didn't get my ass beat that day. So anyway, be with our teachers. They're putting up with a lot of stuff, and it's tough out there. Next slide. Americans' strong distrust for government. As you can see, going back to the late 50s and 60s, what are we doing here? You've learned a lot from me. Is that a good trend? No, it is not. You know what I also find interesting? When a Republican is in office, Republicans are happy, Democrats are not. When a Democrat is in office, Democrats are happy, Republicans are not. When Trump was in, or when Obama was in office, Democrats happy, it's just the same. But to be agnostic here, okay? Trust of our politicians has significantly declined since the 60s. I wonder why. That's all I can say. I'm not even going to say any more because I'll probably start cussing and get in trouble. Anyway, next slide. That's all I got. People, thanks for joining me. This is a record. I'm like 17 minutes today versus 20. It's always good to see you all. I thank you all for joining me. I would really encourage you all to have a wonderful 4th of July. We have much to be thankful for here. You know, we are as my cousin says, we are the tallest midget when you look at other countries, because there's everywhere else in the world is more jacked up than we are. So we still have much to be thankful for. Have a good attitude, be kind, be courteous, and try to make the world a better place. For Wall Street X's and O's on July 1st, 2022, this is Craig Model Mog. Thanks for joining me today, and I am out.